Hello everyone, my name is Kapil Shah and you are watching Quick Market Analysis by FinLearn Academy. So in this week we are seeing that the market has been deteriorated and it was just down by 0.5%, but the selling pressure that we are seeing is from past 3 weeks. Market slowly and steadily it is coming down. Now coming to the daily chart, here we are seeing that in this particular week market has continuously kept on facing the resistance at a 19,650 level, which is nothing but a rule reversal level, because some weeks back this level was acting as a support level, but once this level has broken out, so this level has started to act as a resistance level. Now if I try to connect it within a trend line with a broader prospect, so here we can understand that there was a certain kind of the rising channel that we have observed in this particular index, where the strong upside momentum was happening by connecting the low points. Also, this is what the immediate lows that we are seeing. So market has broken this particular level, and if you observe, and in a previous episode also we have seen that when there is some sort of M-shaped pattern get formed. So let's say last time the very M-shaped pattern has formed, market has come down. This time also the M-shaped pattern has formed and market has come down, and it has broken the rising trend line as well. So there is a negative implications. So it means that as far as the market is below the 19,650 level, this is what the bearish territory we can see, because already there is a lower high to low sequence has formed, and normally the third declining model. So that was in the first negative move, this is the second negative move, and this is the third negative move which is unfolding with the new confirmations. So the third fall is a normally a painful fall that we can see. So right now the Nifty is a 19,430 level around. So next best support level is a 19,300 level, which is what a medium term support level we can see. And if price is broken this particular level, 19,300 level, then the next best support level that we are witnessing, which is nothing but in long term role reversal level. So last time the market has taken the support regions near about by 18,800, 900 or so. So this can become a potential support level. So in a nutshell, the market is under pressure. 19,650 is what are a stop loss point for the bearish view. 19,650 level above, the market can have a kind of a turnaround. But as far as negative momentum, the very first support level is a 19,300 level, and the next best support level is a 18,800, 900 or so. Now looking at a sector perspective, so here we can do the comparative analysis. Let's say this is what in a base of the market where the market has started to pick up its momentum. So if I have to consider the recent upswing, so this is what the level, because this is what an all-time high breakout level, and from that period point very back-to-back strong upside momentum that we have observed, and now we are retracing to that as well. So this is the near about by I think 2606. So I have taken this particular point as an starting point to do the comparative analysis. So here this is what a comparative chart that I am able to see. So starting point is the 23 June, and this is what till 10th August, and this is what my list of the entire sectors. So in this movement from 23rd 06 till date, Nifty has moved by 104 percentage, and there are various sectors which has did well. So let's say this is what a Nifty 50, Nifty 200. So this all sector has performed quite well as compared to the broader market. So here we can see that okay fine, Nifty media led by Z Entertainment stock, it is doing well. Pharma stocks, micro stocks, they are doing well. Metals, PSU banks, they have kept on doing well. So these are the sectors which has outperformed very well. But now as we have been under the negative momentum, so let's see which are the sectors that has been under the pain. So below to this level, this is the sectors that we are under the pain, and we below this little sector we are seeing that in Nifty Financial Services they have given some sorts of weakness as well, and still there is some sorts of round of pain we can expect. Now from a stock specific, if I have to talk about, then first of all I will take the stock that is Bajaj Finserv. So this is what the Bajaj Finserv stock, if we look at, so this is what in one of the FMCG, financial services company. So it has given a very decent upside momentum. So let's say this was an upside momentum that has happened. So this is what the resistance level, this is the resistance level, this is a monthly chart. There is an uptick happened, but this uptick fizzled out at its in a previous base level, and this month so far we have started to see the bearish sign. On the weekly chart, this is what it becomes a little bit more clear. The earlier support level is acted as resistance, and we have seen a good amount of declining momentum. Now if I correct the trend line of a recent upside move, so here we are seeing that this is what the breach of trend line has happened, and Along with that, prices has come down little bit. Some sorts of upside momentum happened. Technically, this formation we call it as an inverted flag pattern. So what is inverted flag pattern? So this is what Paul, the prices has fallen down. It has taken a little bit a recovery. Then again, it has started to shed down its momentum. So in this particular formation, this is a bearish continuation sign that we are seeing, because the market, the stock is reacting from its higher time frame level, resistance level. It has came down drastically, took a pause or a relief rally, and then again it is continuing to move on the downside. Now this particular level, as far as the prices are below this particular previous 2 days high, so this is considered as a negative development for it. So let's say 1530 1540 level also, so there is 40 points from the current level. So below this level, this is what a negative zone we can say. And on the lower side, if we have to see some sorts of immediate support level, so previous resistance level which can act as a support level, so this is what at 1440 level kind of thing is that. So there is a 60 point kind of pain is that, and there is a 30-35 point risk is that. So risk reward ratio is almost a two kind of thing that we can see. Now, apart from that, in this particular week, we have seen that a chemical stock has did very worst. But after the very strong amount of selling pressure, some of the chemical stock has started to revive on the higher side as well. That is going to be contraband, so we have to be a little bit broader horizon, and we have to have the accumulation approach for the stock. So one stock that I find is a nozzle, because in a nozzle what happened is that, and this is one of my favorite pattern, if I take you to the yearly chart, and I'm a very big fan of that, with the stock which has given a breakout of the very long consolidation band. So let's say since 1994 till 2016, so almost 20 years around. So 1994 to 2017. So this was almost 22 years kind of thing period we can say. It has given the breakout. After the breakout, it has retested this level and it has started to pick up its momentum as well. This is a yearly chart. If I come to the quarterly chart or monthly chart, here I can see that okay, whatever the upside in a recent upside momentum happened, prices are forming a base, and this base, which is a support level, it was an earlier resistance point as well. On the weekly chart or on the monthly chart, prices has two times taken the support level around this level. So one time, and this is what a two time. When the chemical sector was falling, it was also falling, but in the latter part of the time, it has started to form the base. So multiple low levels that we are able to see over here: one time, two time, three time, four time. And after this formation, prices has given the breach above this particular falling trend line. So it shows that there is some sorts of a resumption of buying pressure that we are witnessing. And again, one of the favorite pattern, expanded range candle, retracement to the midpoint, and there is some sorts of a positive sign that we are seeing. But this is a little bit broader perspective, the call that we are seeing here. Traders need to have the accumulation approach. I can rather the trader, I can say that the investor kind of thing. 233 216 level, this is what our accumulation zone. This is what ultimately going to be our stop loss. So stop loss is quite wide away. Accordingly, we have to position ourselves. And then if the things unfolds and chemical stock starts to pick up its movement, then the next best upside potential that we can see is around this level. But I will be not too much early to get exit out of it, because the stock is rebounding from the very higher time frame and long term structures. So maybe up to these particular levels are there. So this is what an upside potential that we can see, and this is what a range that we have seen. Now the stock is rising from the lower band of the consolidation patch, so it can travel up to the upper band of the consolidation patch. So this is what my broader analysis in the stock. Whatever the discussions that we did for the market sector and stock specific, this is for the educational purpose only. Thank you so much, and see you into our next video. Thanks once again.